Hello, and welcome to the LTAM Asset Management third quarter market update. My name is Phil Blancato. I'm with LTAM Asset Management. Well, once again, it's been an unusual summer. That seems to be a theme the last few years. You might remember last year was pretty turbulent. 2013, just before the summer, we had the taper tantrum, which made things pretty turbulent. And in truth, each summer has not been a lot of fun for the last few years. But oddly enough, an amazing thing tends to happen in the fourth quarter. Of the last 6 years, the fourth quarter has been the best quarter of the year. In fact, the average rate of return for the fourth quarter is 7.2%, with only one of the past 6 years' fourth quarters being flat. So you see, we have high expectations for the fourth quarter of the year. But I'm sure many of you are looking at your month-end statement or your performance report and wondering what the heck happened. Well, finally, some volatility came into the market. And you might remember at the beginning of the year, we talked about how this year, because the federal government would be as accommodated, not printing as much money or being as helpful with the economy, the market would be more volatile. Stocks would have to stand on their own 2 feet. They were going to have to grow on their own without artificial stimulus. And the truth be told, the economy's done pretty well. And many of our American companies have done fairly well as well. At the end of the third quarter, most companies outside of the energy sector were up in earnings. In fact, we're seeing earnings reports come in on a regular basis that are better than good. However, the energy sector has continued to be a real lag on the overall corporate health of the country, which just seems kind of unusual. Energy today represents 20% of our population's workforce. The other 80% are benefiting from an energy correction. However, that still is a big drag on the overall stock market. We think some of that's temporary. Long term, we think that's going to straighten itself out. But in the short term, it's weighing on how much earnings are being driven by U.S. corporations. Couple that with some real insensitivity around the Federal Reserve. The Fed has been a real challenge. Whether or not they're going to raise interest rates, whether they're going to extend them out further, what it's going to do to our economy, inflation, and so on, has really brought a lot of market volatility in. Add in a few geopolitical events like the constant bantering around Greece, Middle East crises, and then by and large a political turmoil that we continue to be a part of. None of these have been helpful for the overall health of the stock market. However, on the positive side, things are much better than you would think they are. Maybe you've heard some headlines on how unemployment isn't any better, or more importantly, how China is slowing down and going to send us into a massive recession, or how Europe isn't growing and we as a country are falling behind because of it. We don't believe any of that's the case. First off, the labor market in the United States is very healthy. In fact, we are now at 5.1% national unemployment. Anything below 5% means our labor market starts to get tight, meaning there are less work available for the jobs open. That's usually what drives wages higher. So I'm not in the camp of people being worried about the labor market. That's not the case. People, nearly 7 million of them, have gone back to work. The housing market is a great indicator of consumer health. You see the consumer is getting healthier every single day. In fact, the consumer is more healthy today than it's been at any time in the last 6 years. The housing market is turning positive. You're starting to see the number of new homes being built go up to over 1.2 million, which is a great sign. And the price of your home is probably a little bit higher than what it's been recently. So the housing market gets stronger, our economy gets stronger because of a stronger consumer. Add to that inflation. The reality is you're paying less for gasoline right now. When you go to the pump, it's costing you probably a full $1 less than it did last year. Now, I know food might be a little volatile, but if you pay less for home heating and you pay less for gasoline and natural gas, that means you make more money. So from an energy standpoint, you, the consumer, we all are healthier because of the correction in energy. So the consumer is doing better than it's been in a long, long time. Add to that, I'm not really concerned about the Federal Reserve. While there's been a lot of consternation about the Fed raising interest rates, the reality is they may raise it by 0.25 or 1%. Heck, they might even raise it by half of 1% over the next 6 months. But over the long term, probably not that big a deal. The economy can handle it. In fact, it'll be better for you, the consumer, from the idea of making more money on your bank account finally. So for all the negative noise out there, things aren't really that bad. You can still get a loan really inexpensively. Most of your goods and services aren't any more expensive than they've been. You're probably back to work. By and large, our economy is growing. You see, we grew at over 3% in the second quarter of this year, and we're probably going to grow just about 3% in the third quarter of this year. So that's a pretty darn good number. Not as good as it used to be, but certainly not bad. Don't worry about China. We only sell 0.75 of our annual GDP. So from 1 to 100 scale, 0.75 is all we sell to China. So if they slow down, not a big deal. Greece has an economy smaller than the city of Detroit. Not a big deal. By and large, Europe, while not doing great, is slowly getting better because they're getting lots of stimulus from the European Union. So in summary, everybody, don't let the headlines fool you. Volatility in the marketplace like we've seen is normal. We call this a garden variety correction. September is by far the worst month of the year. Going back the last 100 years, September is on average the only losing month. And the second and third worst are October and August. So this is pretty normal stuff. A correction gives you a chance to buy stocks cheaper, get reinvested in the market, but don't be concerned over the long term. We still have great faith in the U.S. economy. If at any time you have any questions or concerns, please contact your financial advisor. They can reach out to us, and hopefully we can get your question answered. Thank you very much. Have a healthy and happy holiday season, because that's probably the next time I'll get a chance to talk to you. Thank you very much. Take care.